Good afternoon. You've tuned into Your Stocks on CNBC-TV18 and I'm Vinny Motiwala. This is a show where we will be solving all your stock-related queries with our experts. But first, a quick look at what the market is doing. A very range-bound trading session is what we've seen coming in for the markets. 24,580 levels to 24,650 levels, around that mark is where we're seeing the Nifty moving at. As of now, similar levels, right? 24,648 is what's holding on to. 0.1% of gain coming in for the Nifty. The pressure today is coming in for a Nifty Bank. That's trading in the red. It's down almost 1/10 to 0.2% in trade when you look at it from the Nifty Bank side. So yes, it was in the green and then it's seen a fall coming in. Keep an eye out on that one. And other than that, we have Nifty Auto. Let's pull that up as well, because Nifty Auto seems like it's picked up some bit of a gain and traction in the last few minutes as well. So yes, keeping an eye on Nifty Auto, holding on to gains of 0.5% in trade. In terms of a sectoral mover, among the top sectoral gainers that we've seen coming in for the trading session. But let's move on and get started then with all your stock-related queries. And today, the experts are joining in with us are Soni Patnaik, Assistant Vice President, Derivative Research at JM Financial Services, and Parthiv Shah, Director at Tracom Stock Brokers, to answer all your stock-related doubts. Thank you so much, Soni, as well as Parthiv, for always joining in with us and solving all our viewers' queries. I'll start, with the first query for today. It is from on the stock EPL. Now, this is coming in from Nivendu Sharma, who's writing to us from Ahmedabad. They're holding 500 shares of EPL at a price of 180 rupees per share. Wants to know whether to hold or look to sell at the current levels. They are making profit, so is it the time to get out of the stock? Parthiv, good afternoon, and what's your view on EPL?
Good afternoon, Vinny, Soni, and all our viewers. See, I think it's a fantastically run company. It's a specialty packaging firm, and it's primarily owned by Blackstone. And since August 2019, and ever since Blackstone took over this company, they've included a lot of operational excellencies, and also they've helped the company to scale up their client base. So if you see in terms of the categories that they cater into, so oral care, they are one of the dominant players in the country with almost 53% share. Beauty and cosmetics, they are almost 34%. Pharma is 10%. And other industrial packaging, they are 4%. And more importantly, I think how this company has manages gross margins, especially after the takeover of Blackstone, I think that has been stupendous, despite a lot of volatility that one has experienced in the raw material pricing. And even in terms of exports, I think in terms of geographies, the company is extremely well catering to the European markets, the American markets, Latin American markets. And our sense is that, going ahead, this company can do extremely well. A lot of MNC customers that they are scaling up, they're doing capex, and as and when their volume growth picks up, as and when the consumer sentiment improves, I think EPL should be a beneficiary. So we would suggest a hold on this counter.
Okay, so just to hold on this counter, expecting a good move and good traction on the fundamental side. That's the word on Parthiv, coming in from Parthiv on EPL. But Soni, on the technicals and charts, this stock has started performing very well, and especially whether you look at it YTD or the last 6 months, good strong performance, especially 6 months, 45% uptick. On the charts, does it merit booking out at least some profit, or what is the chart also indicating now?
Hi, good afternoon, Vinny and Parthiv. Thank you for having me on your show. I think, yes, on monthly charts, the stock is looking quite constructive, and, one can actually trail these stop loss or maybe book a partial profit around the current levels. But 250, 260 range has multiple support, and month-on-month basis, the stock has a potential to test 320 plus levels. So the advice would be actually to continue with holding the stock. One may book partial profits. However, we feel that it can test towards 320 plus levels. I think that's the level one can actually look out for booking profits.
Okay, so keep an eye out on those levels for EPL over there. Let's move on to the next query for today. It's Indian Hotels. Now we have Jaishil Khetani, who's writing to us from Mumbai, holding 115 shares of Indian Hotels, price of 128 rupees per share. So yes, they're making good amount of profit because Indian Hotels today is trading at 838 rupees. So what is the future prospect of this one? In terms of a long-term investment, Parthiv, Indian Hotels continue to hold this or maybe book out some profits, given that he's made so much money from 128 to today 800 levels?
Yeah, absolutely no harm booking some profits, because I think the investor is sitting on fantastic set of returns. No doubt they're owning one of India's finest hotel chains, and Indian Hotels has done extremely well for all. I think if you listen into the con call commentary of Indian Hotels, the management has been talking of that this particular cycle is still having a lot of legs because in terms of the demand growth, we are witnessing a quarter-on-quarter growth of almost 7%. And in terms of new capacity addition is happening at a very tepid snail's pace of 2 to 3%. So I think the luxury hotel people like Indian hotel guys, I think they should have a very good run. The occupancy rates have been good, and we are expecting a very strong H2, which is where the seasonality kicks in terms of the vacationing and the weddings. I think that is where we'll see even better numbers. But yes, the only reason to book some profits is because a lot of this goodness seems to be factored into the valuations. It's quoting at around a trail P multiple of around 84. And even if I were to analyze 2 years forward in terms of a stupendous growth, then also we are talking of 50, 60 times, which is, I think, a little pricey in our sense. So I would certainly suggest some profit booking and keep rest of the position.
Okay, some profit booking, and then you can continue to hold the stock. That's a word from Parthiv. But on the chart, Soni, similar views as Parthiv?
Quite yes, because the stock is actually at its all-time highs and it has moved quite strongly. One, it's a wise to take some profits off the table. Can continue to hold. Maybe there's another 5 to 6% that can be seen. The stock may test towards 880 to 900 range. I think that's the level one. Can look forward to booking the rest of the profits. But certainly, I think since the gentleman is holding from such a lower level, I think it's very good trade, and one can actually look the book partial profits. Trail stop losses around at least to 750 and then hold for around 900 from where you can book all your entire profits.
Okay, keeping an eye out on Indian hotels. Let's move on to the next query for today. We have it on Castrol India. Now, Castrol India, when you look at it, last 6 months, the stock has seen a decline of around 15-16%. KS Rao is writing to us from Andhra Pradesh. He's holding 120 shares of Castrol India at a price of 150 rupees per share. Wants to know whether to hold or sell and what is the view coming in. Especially, can he hold the shares for 1 more year? So, on the long-term basis, does it merit holding the share? Currently, stock is trading at 214 rupees. So, yes, they're making some bit of a profit. Parthiv, what's the long-term view for this one?
After a very, very long time, I think we are seeing some sort of aggression coming out of Castrol's management because I think this is a company which had the best of the balance sheet in the industry, no two ways about it, a great brand, everything. But a lot of competitors like Gulf Oil, I think, did a lot better than Castrol. And probably it seemed like the management was kind of in a sleepy mode. But of late, I think the management has gotten very aggressive. We are seeing decent volume growth emerging since the last few quarters. Plus, I think they're going into more innovative space. They are also working on EV coolants, EV battery coolants, and also data center related coolants that they're supplying to cool the data centers, which seems to be a very good growing business and a business with very high margins. Currently, I think no complaints with the gross margins because the base oil prices have stayed low thanks to the lower oil prices. So I think going ahead, the margins should do well. And if at all they are able to report similar volume growth numbers going ahead, I think the stock has legs to re-rate from here. Till then, I think it also pays a juicy dividend. We do like this counter, and at least with a 1 year horizon, certainly suggest the investor to hold on.
Okay, continue to hold the stock. That's the view coming in from Parthiv. Soni, what's your view on Castrol India? Given that we have seen a correction coming in, would you say the viewer should continue to hold the stock? Because last 6 months, 16% decline.
So, Vinny, what we can see on monthly charts is that 180-85 range seems to be holding as a monthly support. And as long as this continues, there's a possibility that the stock can test towards 230. Now it faces a major resistance around that level from where we'd seen, some serious correction. So possibly if it's able to cross the 230 mark on a positional basis, then only again, it can retake the levels of 280 plus. In any way, we advise to hold till 180, which is a good support. And if it breaks, then you can book. Either way, you'll be in profit because since the gentleman has bought from 150 odd levels, you'll still be making 30 odd rupees. So 180 is the level to hold for.
Okay, let's move on to the next query for today. We have Berger Paints, that's the stock query. Rakesh Jain, who's writing to us from Chennai, holding 40 shares of Berger Paints at a price of rupees 618 rupees per share. Currently, the stock is trading at 477, so he's making a loss on this one. Wants to know whether he should book out his losses or continue to stay invested in Berger Paints. But fundamentally, how is the paint sector looking like? And specifically Berger Paints, what are we watching out for here?
I think the entire paint sector has been reporting pretty tepid volumes in terms of even the decorative paints, which has always helped these companies to grow well. And one of the reasons being certainly there's a demand slowdown, no two ways about it, especially even from the rural segment. And also, I think the aggression of Grasim's Birla Opus paints. I think one is hearing that they've been very aggressive. They are even willing to let go some of the pricing power because eventually they know, being a strong brand, they will be able to catch up in terms of the pricing. But they are there to disrupt the market, and that has led to a lot of derating into very expensive, high-valued paint counters like that of Asian Paints and Berger Paints. But I think the Berger Paints management is pretty vocal that though they are currently number two, and after the capex that they have in Uttar Pradesh, I think they should have a sizable market share. And it's not that they've lost major market share of late; it's just the demand slowdown. So I think one will have to wait out. It's a down cycle for the paint companies. So we are upbeat. I think H2 should be better in terms of the rural segment as well. So as and when the volume growth recovers and the gross margin should be held up well because the raw material input costs have been low, especially titanium dioxide. So that is where we feel the paint counters can rebound. And Berger Paints, I think, is a quality name. The current valuations are a little attractive at this juncture.
Okay, that's a view coming in on Berger Paints. But on that note, we're going to slip into a very short break, viewers. But don't go anywhere, because after the break, we'll be solving more of the queries. So stay tuned in. Thanks for staying tuned into your stocks on CNBC TV18. Moving on to a special segment of ours and the growth code, an initiative by Grow and CNBC TV18. Whether you are a new to investing investor or a seasoned professional, our goal is to provide you with the insights and strategies that you need to navigate the market and make informed market decisions. Today, we are diving into the viewer queries to help traders avoid common mistakes as well as build smarter habits. To solve those doubts and continuing with those related queries, we still have Soni Patnaik as well as Parthiv Shah on this special segment as well. We're going to switch it up, guys, and we're going to talk about, how one should be looking at, making good habits while investing. What is it that's something they should be avoiding? And on this front, the first query today we have is coming in from Sagar Singh, who's writing to us from Mumbai. He's saying that after a losing streak, he feels so frustrated that it clouds his judgment and is tempted to trade bigger positions to recover faster in terms of the losses. Now, but usually that is something that backfires. Now, wants to know how can he actually rebuild his confidence and the approach that one should be actually taking in the market rationally, especially when you've made a loss. You're obviously emotionally taking decisions sometimes. Parthiv, let me take it to you first. If you're a long-term investor, and sometimes you see ups and downs in the markets, what is it that one should be doing? Because it's natural to feel that emotion coming into play sometimes.
Yes, this is a very common query, and we've handled clients since the last 30 years, and a lot of such queries come that whenever trades don't go well and there have been continuous streaks of losses, I think there's this revenge trade that they want to do, which is in even bigger quantum or even bigger leverage, trying to recoup. So I always tell those clients, though I tell in Hindi, कि अगर चाय में पार्ले जी बिस्कुट गिर जाता है, पिघल जाता है, तो उसको दूसरे पार्ले जी बिस्कुट से निकालना नहीं चाहिए. So in short, that's a very wrong thing to do. It's always proven to be futile. We suggest them to, try and recoup this loss via fundamental investing. Not only that, you can even look into not good quality IPOs. You never know. Few IPOs, if you get allotments, I think a lot of your losses can get recouped. That will give you a mindset to be level-headed and again play the market for the long term.
Right, absolutely. I love that Hindi saying that you said, chai mein biscuit doob jaye to, Parle Ji doob jaye to you shouldn't remove it with another Parle Ji biscuit. Soni, what's your take on this one? What should the viewer do at such a time?
I think it's also wise to understand some of the market conditions that impacts the price movement. And, when you are aware of what can be impacting your price movement, so you get yourself acquainted with such levels. I think that would also certainly help keep your discipline intact and never lose out on, what you're doing on a daily basis. Even though if one day goes wrong, it's not wise just to lose out on that particular moment. It's a religious learning on a daily basis that may help you grow better.
discipline is going to be a key, you know, always maintain it and keep going forward. So yes, that's the view coming in on that query. Let's move on to the next query. We have Preeti Kumar, who's writing to us from Ahmedabad, and she wants to know, when the market corrects sharply, she wants to know whether she should look at charts or for a significant recovery sign, or focus more on fundamentals at such a time to determine whether to hold, exit, look to add. What should the viewer do at such a time? Parthiv, let me take it to you. You know, at such a time when you're seeing markets correcting, we've seen it come a short while ago in the Indian markets. What is it that the viewer should be looking at?
Yeah, I'm sure Soni will agree with me. A combination of techno funda, I think, always plays very well in our markets. But I'm a fundamental analyst, so I will talk on that regards. I think it's always a good idea to read the company's fundamentals and also understand the valuation at which it is quoting at, and also try and understand what sort of growth drivers are going to be there in future. If one has the ability to pencil in next 3 years of growth projections, and if the markets were to correct, and if the same company stock also with the broader market were to correct, I think you will have a lot more conviction to bet on that particular stock or that sector, because you already done the groundwork of fundamental analysis, and you know that despite this short-term blip or short-term correction, the next 3 years are looking good. Because eventually, I think the price of the share or price of the company will move based on it's slave to the earnings. So if the earnings projections are good and your fundamental study is good, you'll get the conviction to buy it cheaper.
Sure. And Soni, what's your view on this one? Techno-funda combination, that's what you agree with as well?
Absolutely. I think Parthiv has covered it quite well. I would just like to add one extra point is that, you know, if you can also hedge your portfolio with some of the derivative learnings, that would certainly help you in the such market volatility times or any sort of correction. So I think that is also one very important aspect, and that would hedge your positions to a very long time. So I think that's one extra point that I can add.
Okay, sure. Thank you so much for that and, you know, taking up that query and solving the doubt. But let's move on to the next one. We have Divya Sharma, who's writing to us from Pune. She says that she has been not told to put all her eggs in one basket. She's asking how she has to not over diversify her portfolio. While not putting eggs in your one basket, sometimes you end up over diversifying and, you know, adding too many stocks in your portfolio. How should one be avoiding that? What should one be doing? Parthiv, what's your view?
As the great late investor, Mr. Charlie Munger, always said that I think for him it was always easier to pick 5 or 10 ideas versus 100. And he always believed doing more than 100 is more like diversification of your portfolio. So I think upon intended in that. So I think human ability is, I think, to have a portfolio which is of 15 to max 25 stocks, because generally if you see a mutual fund portfolio that has around 60 to 70 stocks. So I think the concentrated investor, I think, has to be extremely sure on the bet, because this is not something where, you know, people with lower net worth should do, trying to invest all of their savings into one particular counter. Because I think if it doesn't go as per the plan, then I think you'll be totally out of the market for many, many years to come. So I think if you are looking to diversify your portfolio, diversify it in terms of sectorally, and try and see that if you're managing a direct stock portfolio, not to have more than 15 to 20 stocks, because I doubt beyond that particular portfolio, one will have the ability to track the number of stocks.
Okay. Let's move on to the next query. Soni, this one is coming in from Rohit Shah, and who's writing to us from Hyderabad. He says that he finds himself over trading after a loss, thinking just one more trade will fix everything. He wants to know what strategies can he use to step away from the market, where to avoid this over trading situation.
So Vinny, I feel that there are no fixes in market, and when you end up doing a lot of trades, you may end up exposing yourself to additional risk. So I think it is important for one to understand what risk appetite is, for, and what can be the potential of the trade that you are entering into. Now, if you've defined those terms better, you would have a better idea of how much you can invest and how much is the loss or the risk or the potential reward that you can look forward in that trade. I think that's more important to keep in mind. And just doing 5 trades or 10 trades or 20 trades is not going to fix. So I think it's better to select a few trades, but then stick to quality ones and understand where what can be the rationale behind picking those trades. I think that is where it will help you.
Right, okay. Soni, we have one query also, again coming back to you, because this is on the technical front. Now we have Shreya Jaiswal, who's writing to us from Kolkata. She says that as a retail investor, she often gets caught up in those market noises and market impulsive decisions. She wants to know, how will technical analysis help her stay disciplined and to avoid those emotional trades that sometimes, and making those emotional trading mistakes that a viewer normally makes.
So, Vinny, the key over here is to be disciplined, and, everyone would have 1,000 odd levels to follow, 1,000 odd tricks and techniques or technical analysis. But the point is to stick to a few ones that actually has worked out for you in the past and to religiously follow them up. Even if a day goes by where your where your techniques or tricks have failed, that does not mean that we give up on those, but rather to understand why it has failed and how it can be better, or what were the reasons for failing in those particular days. I think the only trick over here is to religiously follow up on a daily basis of the levels and the technicals that you are following, understand them better, and keep it through, so that over a period of time you would actually see success to it. So avoid the market noise and stick to what you know as per the data and the rationale that you believe.
Okay, thank you so much, Soni, as well as Parthiv, for joining in with us on the show today, solving the stock-related queries as well as how one should be disciplined in their investing habits. That's also important. So thank you so much for joining in with us on the show today. Now, that's all the time we have on this edition of Your Stocks on CNBC TV18. But do remember to email us your queries and we will address them with our experts. Stay tuned in. Up next, you have Closing Bell.